Global markets are holding steady despite a softer tone in risk assets. Wall Street, Europe and Asia all flirting with record highs as investors now brace for key CPI data that could steer the next wave of central bank moves. For more, we're joined by Steve Gopalam from Scander FX in Sydney. Steve, good to see you. Talk to us about the current sentiment in global markets. How would you describe it?
Good morning, Aaron. Thanks for having me. Yes, quite interesting times in global markets as we speak right now. We've heard from President Trump, who's come out yesterday and put some sanctions on Russian oil companies. So we've seen a bit of lift in energy, especially WTI, and that's correlated to all the energy stocks in the US stock market. So risk markets in general have picked up. We're seeing an uplift in commodity prices as well. As you probably noticed, gold is still above the 4K handle, and investors can't just get enough of gold. They want to get more gold.
Yes, very much so. I just want to touch on the oil story and Russia, because if the US puts sanctions, and as they have, on Russian oil and different countries buying it, wouldn't that push down the price? Why is it pushing it up?
Good question, and it all comes down to the supply and demand for oil. OPEC has come out and said that there's plenty of supply. So I think this is a short-term move in the markets, especially in the WTI front-end contract. So that's what we saw the lift in. It almost jumped almost 6%, close to $61 a handle. It's also to do with the fact that it's kind of to not probably give India a smack on their wrist and say, hey, stop buying Russian oil, and also to crush Russian oil profits. So 3% of, I think, sorry, 30% of Russian revenue comes from oil, and majority of Indian oil imports come from Russia. So does China as well. And so this is a way to prevent or somehow get put into a corner. But
Yeah.
I don't know what's going to happen.
Now, talking of putting into a corner, you mentioned gold. The week started with long queues in Martin Place, ABC Bullion, with people trying to get their hands on some gold. This week, end of the week, I imagine people are going through their pockets trying to find the receipt. It's been a heck of a week for gold.
Interesting times for gold. I mean, obviously it's gone from institutional demand to retail crowd. When retail gets behind things like this, traditionally, it's just mom and dads jumping in. They don't want to miss out on an opportunity of a lifetime. People saw what happened to Bitcoin, and they're sure that they don't want to miss out on an opportunity like this. So, look, demand for gold is only just going to increase from here. What we're seeing is also a rotation of ETF investors removing all their longs. So we're seeing a bit of a subdued demand from ETF players. But overall, my view is that gold probably will see a bit of retracement, probably around the 3.8 or 3.5 handle, and then from there resume its uptrend. I mean, it's probably towards the end of next year. We should be well above 5K.
Wow, so drop down and then shoot back up again. Talk to us about, I guess, the resilience in equities despite the recent volatility, because you've got a trade war between China and Russia, uncertainty about the meeting with President Xi and President Trump happening next week. Obviously, the gold question, we've had some disappointing results out from the US. Why is everyone so resilient, though?
Because in short, no one has got anything else to focus on, because the U.S. government has been in shutdown mode for the last 2 weeks, all right? So this is going to long. This has been almost 22 days, and looks like it's going to be one of the longest in the history. So there's no real critical data that's coming out. Everyone's convinced that the Fed's probably going to cut rates. So next meeting is on October the 29th. And 98% conviction is that the Fed's going to cut by 25 basis points. Well, the only thing that's going to apply handbrakes to that is tonight's US CPI release. If the print comes in hotter, then maybe it might actually make the Fed think twice before going in cutting rates. In saying that, Fed's mandate has moved from inflation to unemployment, because those unemployment numbers have been pretty poor in the last. Technically, the government releases have been pretty poor. Overall, investors are confident that the Fed is kind of cornered to cut rates either now or at some point in the future. So they're just front running. So it's just animal mentality, the herd mentality. The spirits are back. All that means for pretty institutional investors is that they're using this opportunity just to to diversify into different sectors. You've probably seen that AI sectors has taken a lot of hate. Quantum chips as well. We've heard from Trump and his team President Trump and his team that they're in chat with Australia to organize some sort of rare earth minerals partnership as well. So huge demand from across all sectors.
Yeah, very much so. Let's talk about Albo's meeting with President Trump that you just touched on there as well, the critical minerals stuff. Is this the Trump card that Trump needs going into the meeting with Xi Jinping, who obviously ahead of this meeting, they're approaching it like two divorced ex-lovers, where they're bringing, whatever they can to this meeting to try and get leverage on each other. Does Trump have Australia's critical minerals now as leverage?
I don't think so, because 60% of the rare earth minerals production comes from China. They are the kings when it comes to production of those minerals. So I think that most likely is that this probably, yes, you could use that as a not a trump card, more like hey, we've got a partnership going on with Australia, so that could help us as well. But overall, in saying that this meeting is only confirmed by the US side, I don't think we've heard from Chinese side where they've confirmed that yes, they're going to meet with President Trump. So it all feels like it's come from one side, from US. So let's just wait for confirmation from China as well. But in that scheme of things, look, I don't think China's actually openly said they'll stop supplying rare earth minerals to everyone. All they've said is they've got a list of approved companies, and they're really going to focus on that. So I think there's a lot of misunderstandings right now going on in the markets.
Yeah, very much so. I'm interested about the renewed strength in the US dollar as well. Is this because gold has come back? We heard the CEO of BHP talking throughout the week about just how much, I think it's everything except for 15% of their work is done through the US dollar. What's behind the strength of the US dollar?
Couple of things. One is that we've not had much key data that's come out, which comes in from time to time, brings a bit of handbrakes to the US dollar's journey. Right now, everyone's quite confident that when everything is priced in, if everyone's sure that the Fed's going to cut rates, that kind of also puts a change. Removes that anxiety from traders in their sentiment as well. So that's another reason as well. And again, that trade war is still going on. So we're not sure which way it's going to lean. You know what I mean? So that's in the back of investors' mind as well. So a lot of factors supporting the US dollar strength as well. But in saying that, also, where do you put your money? I mean, as a hedge fund, or as an institutional fund, you also want to have access to liquidity, and also to to be able to deploy capital when the opportunity arises.
We are waiting to hear from the RBA. What signals are you looking out for?
Obviously, last week's unemployment data that came in kind of threw a bit of spanner in the works for RBA. I think they were pretty much on the set path of meeting next year to cut rates, but it looks like markets are front run once again. I was seeing the OIS markets. They jumped 65% that the RBA is going to be cutting rates in November. My thoughts, we've got obviously RBA Governor Michelle Bullock speaking today. Interesting will be to see how they quiz her on what her thoughts on the unemployment data is. And the key thing over here is that, irrespective of that, October 29th, we've got the quarterly CPI inflation data. I was reading a note from CBA. They expect the inflation to come in slightly above 3%. And that means that it's just a little bit for the RBA. It's in the uncomfortable territory just to go and cut rates. So it all comes down to the CPI data. And I think, I'm not a mind reader, but I can tell you that the governor is going to be echoing the same words, that let's wait for the CPI data before we commit to anything.
Now, we've only got a minute left, but we have been commending the RBA and the government for a soft landing. But if we have a situation where inflation starts to go up and unemployment goes up, and we're talking about stagflation, has this grand experiment post-COVID actually worked?
good question, and I think it's more of an economist question. But in a nutshell, I would say that look, RB's done a terrific job. They have done their best in terms of controlling inflation, and also given the fact there was so much uncertainty when COVID kicked in, no one knew which way it's going to go. What the outcome's going, what the future is going to look like. So yeah, I'm not going to say that RB has done RBA has all the time cut rates at the right time, but in saying that, they've done their best they can. Also, the other reason for not being able to move ahead is that the price of house prices have been rallying up. As you probably know, that the median house price in Sydney has
Yeah.
just crept up, and that's putting pressure on them as well. They just can't
Yeah.
go and cut rates and then cause more panic in the markets.
All right, Steve Goplam, appreciate your time. Thank you.
Thank you so much.